Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video guys, I want to make a big update on AMC and GME. Let's go through everything that happened this week. We had good things, we had bad things. So let's try to understand what happened and see what can happen next. Let's get into it. Alright guys, so I'm starting with AMC daily time frame first. I'm gonna go on a weekly time frame as well guys, because we have some information there. So let's see what happened. I did my last video guys last Friday. It was here. Okay, we had this hammer candle. Okay guys, so first the good things that we can already notice is that we start to have those reversal signals that are coming repetitively. We had one 2 weeks ago, we have one last week. Then we had the better income than expected guys that happened on Tuesday. So we had a massive rally guys, and unfortunately this is not a good sign. It got rejected on a red day with huge volume. You can see guys this volume. So what does this mean guys? Okay, so this is bad sign. So we have already a few information, 2 reversal candles and one strong bearish day on after good news. All right, so buy the rumors, sell the news kind of situation. So we have actually reached a period of balance guys. As you can see, before it was all for the bears. Now we have some bullish signals and some bearish signals. So what is this telling us? First, let's go on a weekly time frame, because it's quite interesting I think to look at that. And you guys can see that it's the first time we have a green week guys, for plus 2% for the past 1, 2, 3, 4, 5, 6 weeks guys, so 1 month and a half. And before that we had this hammer candle that was a nice reversal candle by the way, but it was not enough. And then it was again 3 red weeks in a row. So basically it's a good sign. For the first time we have a positive week guys. So this is also showing that we have reached a period of balance. Now, if you check the 200-week moving average, once again, you guys know that this 200 period moving averages are important, all right? So the daily is more important, okay? But the weekly is still important. And we are above, guys. We are finding some sort of support around 1507 for now. So this is the last bullish, long-term bullish signal we have that is still intact. Okay, so this is just reminding us guys that we are in a bull trend for more than 1 year with a strong correction. I agree that happened since June 21 for the past 7-8 months guys, but it's still an uptrend. All right, we're moving higher, we're making higher highs and higher lows. So just a reminder that is I think important to keep in mind whenever we are in such difficult situation. All right, let me go back on the daily time frame and here. So now we have identified that we're in a period of balance. Okay, that's good guys. This means, you know, reversals, which are always start with a breakout, happen after this period of balance. If you have a breakout before this period of balance happened, for example, here we have a period of balance. Okay, you can see on low volume. Right, you can see here guys, low volume here and the price action not moving much. Okay, so this is what we need for a reversal here. Unfortunately the breakout happened on the downside, okay, and we moved lower. So it's not guaranteed it's going to happen on the upside. It just means that if it had happened on the upside, it would have been a very good bullish signal that would have been followed by a lot of big money players, which we need to be in the trade with us. All right guys, apes alone, you know, they can squeeze hedge funds. They did, but the truth is that they were not alone. All right, big money investors, maybe here they were alone, but even here I'm sure asset managers were implied in the trades. And here I showed you guys that in the video I did last week. Asset managers were buying a lot guys during this whole period of time, and they stopped buying here and then we dropped. So we need those guys to be back, and those guys, they're going to follow this, you know, typical situation of low volume, low consolidation, then volume with breakout. By the way guys, I'm building a course. I told you quickly that in my last video, but it's going to be released very soon guys. It's been a very long time. I'm working on that. I'm really trying to bring you guys the best methods that are going to help you to identify actually those trend shifts, okay, using breakouts. It's a course about breakouts where I'm going to talk about volume, volatility, and momentum, which are the price action dynamics, guys, which are key to understand what is happening on this market. And even if there are a lot of traps, by using the right way those indicators of volume, volatility, and momentum, you are able to avoid most of them. Okay, guys? So if you're interested, just click on the link in the description of this video and you're gonna receive an email with a massive discount whenever the masterclass is ready. Okay, so let's go back to what I was saying, guys. So here the breakout, if it happens after this low volume period, that is once again important, it's going to be a good and reliable breakout. But for now, I see this huge red bar of volume. So this is telling me that we need more time. All right, guys, this is what I'm saying for quite some time. And I think that maybe one more week of balance between 14.5 and 18 would be great for this trend line to be broken. You see the yellow trend line. For now, I don't have that many reactions on this trend line. I have 1, 2, 3, 4, 5. It's not that many. I'm not sure this trend line is very visible, but if I have more reactions on low volume just below this trend line, then it's broken, then it's going to look very good, guys. But I need to tell you about the alternative scenario, because for now we have some bullish signals, but we have some bearish signals as well, like this big red day I told you guys. And it's been 3-4 times we are testing the 14.5 level. So you guys know that whenever a level is tested multiple times, it gets weaker. So what would happen if we break 14.5? We will very likely go to the 12 level. And the 12 level, as I told you guys last week, is the consensus of analysts. So we don't really care about what they say, but asset managers, big money players, hedge funds, they do. All right. So if those guys know that 12 is kind of the fair price, they will probably stop selling first and increase their position. They would start to be buyers here. So those guys, they're probably waiting here. So I'm not saying we're going to go there, but I'm saying that if we do, I'm personally going to increase my position, because I know that we're going to have some help, some, good liquidity sitting there and waiting to get in. So what else can I tell you guys? Yeah, let's have a look at the synthetic short. So bam, synthetic long, synthetic short. So we don't have any more synthetic short, guys, okay? Because we have as much synthetic short as synthetic long, which means put options and call options are neutralizing each other at this level of spot. We still have 19% of regular short as of 14th of January. And I'm very curious, once again, it's going to be released next week, to see what is the regular short after those hammer candles, all right? Because I want to see who got trapped in there. Is it shorts that covered? What happened, all right? I need to know. It's going to help me to analyze AMC better. So I'm curious to see if this regular short is going to decrease or not at 19, which is now at 19% as of 14th of Jan. All right, guys. So 2 weeks ago, 3 weeks ago almost. So yeah, we have no more synthetic short, but guys, we still have a crazy option distribution. All right, look at that. These are the options we have on AMC. So you can see we don't have as many 145 strike as we used to, because most of them were on the Jan 22 maturity. We had 20 million of them, guys. I remind you, we still have 5 million of them. So it's, 75% less, but it's still a lot. And you can see this option distribution is still totally unnatural, all right? Because we have big open interest on the 60 strike, 90 strike, 145 strike, all right, guys? So this is telling us, and AMC is at 15, guys. So we're talking about, 5-8 times higher. So this is telling us that if we go there, it's going to be a lot of trouble for option market makers. That's all it's saying. And it's also showing that the movement is still strong. All right. If unfortunately, we fail, which I don't believe. All right. But if we do, those options will no longer be there. So as long as those options are here, the movement is on. All right. This is what I'm checking personally. I'm an option trader and I know that this is not normal. All right. So everything that is not normal tells me that something huge might happen. Is it going to happen for sure? Of course not. But as long as I'm going to see that, guys, I'm going to believe in that. All right. and it's still here, but it's lower than in Jan 22. So let's see if it gets bigger and if option traders increase their positions on those very high strikes or not. DTC is at 2, guys. Let's check what it was before. AMC. Okay, so the DTC is at 2. It was at 3, 1.6 in October. So it was at 3.5 in November, when we almost squeezed, guys. We almost got it, all right? But just, you know, it didn't work out. So now we're back at 2, guys. We need to rebuild that, but we know we need some time, guys. Once again, my scenario is like a couple of months. It's going to depend on the global market. I'm going to post a video about SPY and QQQ tomorrow. Go watch it because I'm going to analyze the global market. And as long as the global market tanks, AMC will not squeeze by itself. All right. Once again, to explain the negative beta situation, it just what happened in the past was one red day on the global market, -2, -3%, AMC +20, and then the global market was increasing together with AMC. AMC will not squeeze without the global market doing good. But a sharp move down in the global market can trigger the first impulse on the way up. But then we need the global market sentiment to be bullish for asset managers, hedge funds, everybody involved in AMC trade, either to cut the short positions for hedge funds or to open new ones. All right, guys. So right now the global market is giving me mixed signals. I'm not sure. So check my video tomorrow. I'm going to make a full analysis, but I give it 1 more month, you know, at least before we go higher. So same for AMC, guys. So the most likely scenario is either we break out here or we don't. I don't know, guys. And then we oscillate somewhere here and only here, guys. So April, June, you know, I know I'm delaying that, you know, for almost 1 year, but I mean, what can I do? I'm just giving you guys what is the most likely to happen for me from here. And the most likely is that we need time. Okay, guys. And we need time because we have those big volume traded here that tell us bears are still active. All right, guys. So that's it for AMC. Neutral between 14.5 and 18, bullish above 18. Below 14.5, we probably go to 12, then rebound because we have a lot of buyers there. And then we need to see what's gonna happen. All right, GME, guys. So same thing. I want to go on the weekly time frame, guys, first. Bam. And on the weekly time frame, what can we see? So first, we have a bullish week, guys, plus 4.5%. Very good. When the rest of the market was not doing that good, guys. So GME resisted very well. It showed very good signs of strength. And look at that, guys. 1, 2, I'm counting the red weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 2.5 months of bear market, guys. So is it gonna keep dropping? Maybe. But what we can say is that for the first time since November 22nd, we have a bullish week. So that's only telling us that we have reached this period of balance that is necessary for a good and reliable breakout. Once again, just like I'm defining it in the course I'm building, guys. And, you know, this is because this is what is really happening. All right. If you don't have this period of balance, okay, like we had here, once again, we broke out on the downside, but this is the period of balance that is needed, okay, for a reversal to be sustainable. Look here. It was the same thing each time, guys. We have a period of balance. So here I'm on the, if I go on the logarithmic scale and I check what happened in the past, guys, it's always the same pattern that form, all right? You have, look here, for example, you know, nothing was happening, guys, very low volume. And then we have a strong move up, okay, guys? So whenever you have a lot of volume trading, the market moving a lot, don't expect a sustainable reversal to happen soon, all right? It's not working like that. We need this period of balance. So right now it's starting. The balance is between 87 and 115. So my take is that we stay in this range for a couple of weeks. All right. If we do break out above 115 without this period of balance, then we'll probably get back to it. Okay. So we might have a few bullish days, but we will eventually get back to it because bears are not ready to let it go. And for bears to be ready to let it go, you know, we need to see that they're ready by checking the volume and the volatility. Low volume, low volatility, guys. Okay. So here, let me check on the daily, and on the daily time frame, it's better than AMC. First thing, because we don't have this huge red day. the volume is not low. These are low volumes, okay? You can compare to the period between 21st of December and 4th of Jan. Right now, they're higher, okay? High volume means uncertainty, means there is a fight between bulls and bears, and it means that a reversal won't be sustainable right now, okay, guys? So we need time. Once again, same conclusion as for AMC. So my scenario, guys, is that we oscillate a little bit longer here, okay? So once again, look, I'm on a log scale. If I go on a regular scale, this trend line is here. So I don't know which one to use at the moment, guys. And I'm explaining that in the course as well. And to know which one to use, you need to check for those consolidations, okay? If we have a nice consolidation here, just like we do here, guys, in this triangle, just below the trend line, it tells you that this is the trend line you need to check. For now, I don't have it. So for now, I don't pay attention to this trend line. I mean, I do, I check it, but I'm not using it for trading. And I think the trend line to use is this one because log scale is more adapted for GME. And I'm expecting something like this, guys, okay? This is what I want to see. Consolidation below this trend line on low volume, guys, important. And if we do have that, then a breakout would attract a lot of investors, especially asset managers and, you know, the big money players that, you know, use this kind of signals to get in. Okay, guys. Let's check the synthetic short interest. Yeah, by the way, I forgot to tell you guys on the AMC, the maximum pain is for February 18th is 21, guys. Okay, so this is the level that we might close at on the 18th of February so that it creates the maximum pain for option holders. So option market makers like to bring the price to this area. Okay, I'm refreshing the data, guys. Okay, so what do we have? First, we can see that we have some synthetic short on GME, 2.5%. We have crazy options as well on the upside. So together, it's going together with the AMC. We have a DTC at 3. Let's compare this DTC to what it was before. Before it was 4, 5, 6, guys. Okay, so when we almost squeezed, of course, we had a higher DTC. All right, now it's 3, so it's same thing, guys. It's going in the same direction. We need time. Bulls need to rebuild, you know, the big synthetic short they had by buying call options. I don't say it's good to buy call options, guys. Don't misinterpret what I'm saying. I'm just saying that if there are a lot of call options, it's putting pressure on option market makers. That's all I'm saying. Don't buy that for now. All right. It's not the right time to buy call options. I don't think so. Unless you sell some puts, but whatever. It's a complicated strategy. I don't want to push you guys to do that. I'm just saying that it's a sign for me that the movement is on, and we have it on GME. And it's putting pressure on option market makers. And the maximum pain is around 120. So on February 18th. So it's a level that, you know, would make sense for GME to close at. Once again, same as AMC 21. So let's see, it's a bit higher. It would be great to close there. So to conclude on the price action on GME, we are in a period of balance between bulls and bears, between 87 and 115. If we break out above 115 after some more consolidation like we do have right now, so it just needs to continue on low volume, it would look very good. We would probably go to the 160 area where we will find more resistance. On the other hand, if we break out below 187, guys, which has been tested twice, it would not be looking good. This would depend a lot on the global market as well, guys. If we have one more bearish cycle on the global market, 87 would be under pressure, and below 87, guys, I don't have any support level. The next one is 40. So I'm not saying we go to 40 if we break out below 87. I'm just saying that bulls won't have any area to gather their strengths and to buy just like they did at 87. So we would need to see where the consolidation takes place, and then we would use that same thing, guys. We'll try to find a breakout to know when it's time to get in. Okay, guys, so that's it for me. I hope you enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.